Hey everyone, it's Julie here with TipRanks, and today we're taking a look at a few stocks that a billionaire hedge fund manager has been buying up lately. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope your week is going well. Today we're taking a look at the recent hedge fund activity of Boykin Eagle Capital Management. Founded back in 1988 by Boykin parents, the firm follows a long-only investment strategy, focusing on large-cap equities and seeking companies with unrecognized growth potential or those that are temporarily undervalued. The hedge fund has amassed assets under management of nearly $27 billion. When looking at the hedge fund's recent activity, there are several stocks that Eagle Capital has been increasing their position in. And when we took a further look, we narrowed it down to 3 stocks that other hedge funds have also been scooping up millions of dollars worth of their stock. So today, we're going to take a look at these companies, what it is that they do, and of course, how Wall Street analysts weigh in on the stock's potential as well. You can follow along over on the TipRanks website or by downloading the TipRanks mobile app. You can do so by scanning the QR code on your screen or following links in the description down below. Just before we get into today's stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into these 3 hedge fund stocks. First up, we're taking a look at a company called Woodward. They trade under the ticker WWD, currently priced at $190 per share. In the past year, the stock has gained over 40%, and in the last 3 months has climbed over 17%. They do currently score a 10 out of 10 on the TipRanks Smart Score. Woodward is known for designing, manufacturing, and servicing control systems for the aerospace and industrial markets. Established back in 1870, they were initially focused on controls for water wheels. Over time, the scope has expanded to include controls for various engine types and turbine systems. They now provide critical components like fuel systems, actuation systems, and engine controls for commercial, military, and general aviation aircraft. They're known for their work on propulsion systems, with their technology used in engines from major manufacturers like General Electric, Pratt & Whitney, and Honeywell. During the last quarter, Eagle Capital Management increased their holding by nearly 15%, bringing the total value to about $807 million. And overall, last quarter, hedge funds increased their holdings by 1.9 million shares. Looking at the list down below, Boykin Eagle Capital there is the largest value reported, but there were also several other hedge funds that took brand new positions or increased their holdings as well. Near the end of November, they did share their Q4 and full year results, where they beat analyst expectations for earnings and revenue, plus saw record sales for the full year. They reported Q4 earnings per share of $1.41, beating analyst expectations by 15 cents per share, and their fourth quarter revenue of $854.5 million grew 10% year over year, beating estimates by over $43 million. Their annual revenue exceeded $3 billion for the first time, with a 14% increase in total sales for the year. This was driven by strong aerospace performance, which saw 22% year-over-year growth. Just over a week ago, a 5-star analyst from Truist Financial did increase their price target on the stock while reiterating a buy. This was part of a broader research note previewing 2025 for the aerospace and defense industry. They noted that the new year feels like Groundhog Day, with 2024 investors' sentiment bullish on an aero OEM production recovery while turning bearish on the aftermarket rally. They added that while aircraft production is likely to improve in 2025, planned production rate increases are not materializing as fast as expected. While Woodward does have a few buy ratings from Wall Street, they also have a few holds, coming in as a moderate buy overall with 3 buys and 5 holds. The average price target comes in just shy of $200, which would imply an upside potential of about 5%. Looking at those recent ratings down below, our more recent ones are a bit more bullish, that high end of $229 coming from Truist for an upside of 20.5%, while we have a couple low-end price targets at $180, that would be a downside of over 5%. For our second stock today, we're taking a look at Alcoa. They trade under the ticker AA, currently priced above $37 per share. Overall, the stock has gained 26% in the past year, but it has cooled off from highs back here in November and is down 11% in the last 3 months. They do score an 8 out of 10 on the TipRanks Smart Score. Alcoa Corporation is a major global player in the aluminum industry. Short for the Aluminum Company of America, they got their start back in 1888 and is now known for their production and processing of bauxite, alumina, and aluminum products. They are one of the largest bauxite miners globally, sourcing this raw material to convert into alumina. With operations across 10 different countries, they operate several alumina refineries, turning bauxite into alumina, which is an essential step before aluminum smelting. Eagle Capital made a slight increase to their Alcoa holding, increasing it by about 3%, bringing the total value to just under $600 million. And overall, hedge funds increased their holdings by over 900,000 shares. Looking at the list down below, there was actually 4 different hedge funds that started brand new positions in the stock, while Eagle Capital does have the highest value reported here. They shared their latest earnings report just yesterday, where they did have an earnings and revenue beat. However, the stock is down slightly today as there are some questions surrounding tariffs. For their fourth quarter, they reported earnings per share of $1.04, beating expectations by 9 cents per share, while revenue came in at $3.49 billion, beating estimates by $40 million and growing 20% sequentially. For the full year, revenue increased to $11.9 billion, growing 13%. The company noted that aluminum production increased for the 8th consecutive quarter, and they expect 2025 will bring the highest ever demand for aluminum, with global consumption to rise about 2%. But that view does not include the potential implementation of tariffs by the U.S. And just today, following that earnings report, we did hear from an analyst at Bank of America who reiterated a buy rating. The analyst is optimistic about Alcoa's future prospects due to the anticipated strong demand for aluminum, driven by supply constraints and gradual alumina price normalization. Despite some challenges, such as higher costs impacting the aluminum segment, the overall outlook for 2025 remains positive. With 7 current analyst ratings, the stock does come in as a moderate buy, with 5 buy ratings and 2 holds. And the average price target of $49 would imply an upside potential of 31%. Looking at those price targets down below, on the low end, we do have a hold at $40 for an upside of 7%, while our high-end price target is today's $58 from Bank of America with an upside of 55%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Workday. They trade under the ticker WDAY, currently priced at $251. They are in the red overall this past year, down about 15%, but have been bouncing back lately since highs in the summer and are up 6% in the last 3 months. They do score an 8 out of 10 on the TipRanks Smart Score. Workday provides cloud applications for finance and human resources. Their HCM, or Human Capital Management suite, helps organizations manage all aspects of their workforce, from recruiting and onboarding to performance management, compensation, benefits administration, and talent development. They also have a suite of financial management tools to help with financial planning, accounting, control, and analysis. And this was one of Eagle Capital's larger holding increases during the quarter, as they boosted their holdings by over 36%, bringing it to over $970 million. And overall, during the quarter, hedge funds increased their holdings by 711,000 shares. Looking at the activity down below, quite a few of them adding to existing positions or starting brand new ones. And while Eagle Capital is near the top of the list, there are some other notably sized positions here, well over $100 million. They shared their third quarter earnings report back on November 26, where they did come out with an earnings and revenue beat. However, some lower than expected future outlook did weigh on the stock. Their Q3 earnings per share came in at $1.89, beating expectations by 11 cents per share, while revenue came in at $2.16 billion, beating by $30 million and growing 15.8% year over year. They also saw their subscriptions revenue grow nearly 16%. Looking forward, they did note some market challenges and fiscal 2026 growth headwinds. Earlier in January, an analyst at Deutsche Bank did upgrade their rating on the Workday stock to a buy. The firm said that they remain constructive on the secular growth opportunity in back office applications, but they do see it being challenged this year relative to other areas of software. They added that outside of forced cloud migrations, they expect budgets to gravitate to platform vendors that are benefiting from an AI halo effect, and as a result see limited upside to estimates across back office versus front office apps. With 28 current analyst ratings, Workday does come in as a strong buy, with 22 buy ratings and 6 holds. Analysts' average price target comes in just above $301, implying an upside potential of over 19%. Looking at those recent ratings, we do have several analysts bumping up their price targets, but also a couple slightly lowering. On the low end, we do have a hold rating here at 242 with a downside of 4%, while our high-end price target comes in at 330 for an upside of over 30%. So that is a quick look at 3 stocks that billionaire hedge fund manager Boykin has been increasing their holding in, along with other hedge funds on Wall Street. Let me know your thoughts on these companies in the comments down below and which one catches your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thanks so much for watching. Have an awesome day, and I'll see you back here next time.